Hello guys, welcome to Sami Brain FX. In today's video we are going to be doing a breakdown of the trade we took on Volatility 50 index. Alright, before we move on, so please do well to subscribe and like our page to continue to receive notification from us. Alright, let's dive in. Okay, so looking at the chart, we did a top-down analysis, meaning we started from a higher time frame to lower time frame before we took our entry. So looking at the daily time frame, so what do we see? Okay, we actually started from the 8 hours time frame. Now looking at the 8 hours time frame, there was a price moving down. First of all, we first of all determine our market bias. That's the trend of the market. So the market was in a downtrend, so I mean there was a series of lower high, lower low, lower high, lower low, lower high, lower low. So price was going down. Okay, so we saw a break of structure here, but it was not very clear. So we'll go down to our 4 hours time frame. Now coming down to our 4 hours time frame, we saw that price here, price broke structure. So price came in, it broke this structure. Okay, it broke this previous low. So price came in, broke this previous low, it closed below it. So this made this a valid break of structure because price closed below the previous low. So there was a break of structure, and then so this was the zone that caused the break of structure. And so we also saw what made this to be a valid zone, because it broke structure. Not only breaking structure, there was a void here called a fair value gap. There was fair value gap here, or inefficiency or price imbalance. So price didn't trade efficiently, so we saw this void here. We saw a break of structure, we saw this void here. So meaning this zone is a valid zone. And then of course the market is in a downtrend, is trending down. So what's the next thing we do? So wait for price to tap into this zone before we look at for an entry. So price came in, so after price broke structure, it retraced, it came in. So price came in, it took out this previous high, it took out this previous high, also took out this high, so came in and tapped into our zone. Now this is 4 hours time frame. So if we go to our 2 hours time frame, okay, now this zone is still the same. We looked at for how we can refine this zone further, but it's still the same zone in the 2 hours time frame. Even getting to the 1 hour time frame is still the same zone. There was nothing to refine. Okay, all right, so we waited for price to come and tap into our zone. So price came in, tap into our zone. So what do? We went to lower time frame to look at for our entry. We can look at for our entry in the 15-minute time frame, in the 10-minute time frame, or in the 5-minute time frame, even 3-minute time frame depending. So we go to our 5 minutes time frame. Let's go to 5 minutes time frame, because that's actually where we took our entry. So on our 5 minute time frame, so this is what we saw. So in a 5 minutes time frame, we saw that price tap into our zone. Of course, before it tapped into our zone, it took out this high again, created like form of liquidity. So price took out this high, tap into our zone. So we waited for a break of structure. Okay, now what are we looking for? Okay, for our entry, we are looking for, this is our entry model. Now for our entry model, we are looking at for something like this. Let's look at for something like, we're looking at something like this. Okay, looking at something like this, where price came in, broke structure. So where price came in, broke structure. After the break of structure, mark that, noted that zone that caused the break of structure, waited for price to come in and tap in. So after we saw the break of structure, okay, we waited for price to tap in, and then we took our entry. So the same thing you saw in the higher time frame, that's the same pattern we are looking for in the lower time frame. Remember, in our lower time frame, this is the same. In our higher time frame, we saw the same pattern. We saw a break of structure and waited for price to tap into our zone. So that's the same thing we are looking at for in our lower time frame. Okay, so in our lower time frame, we waited after price tap into our zone, we waited for a break of structure, which is this. So price came in, tap into our zone. Of course, it consolidated a bit, and then it broke this low, it broke this previous low. So when price broke this previous low, okay, we marked out our zone. Okay, this was our zone, our area of interest. So we waited for price to come in and tap into that zone. So this is where we took our entry, and then the stop loss was above. Remember, this is our zone of interest. Okay, so that's why your stop loss should be above Okay, I know this was a bit tight, okay, but it was safe though. Would have made it to be a little bit higher than this, okay, to be on the safer side. Okay, so we don't make your stop loss to be too tight, so give the market enough space to breathe. Okay, so price came in, it did this pattern. So price came in, broke structure, came in and tapped into a zone, off it went. So that's how we took our trade. So we are doing the same thing, the same pattern. Price repeats itself. Okay, the market structure, remember, is fractal, meaning what happens in the higher time frame is what is likely to happen in the lower time frame. Okay, so the same pattern we saw in the higher time frame, that's the same pattern we are looking at for the lower time frame. The break of structure, the retest, and then we enter trade. So that's what we saw here. Okay, so if we go down to our 1 hour time frame, okay, this was actually our exit point. Okay, this swing low, this was our exit point. Okay, so we got out of the trade here, but of course it was still going down. So that's how we took our trade on our volatility 50 index. All right, so we'll see you in our next video. Goodbye for